5 seconds to the open. You ready?
Who wants to get this thing started right about now?
Welcome to Follow the Money Weekly with your host, Jerry Robinson.
Welcome.
Not just some guru.
Oh, really?
Your host is an economist and a best-selling author.
What an interesting news item. I'd better write that down.
And just someone who likes to make money and help you to make money. Welcome to Follow the Money Weekly. And here he is, Jerry Robinson.
Friends, welcome to you all around the world. Welcome to this very special episode of the Follow the Money podcast. My name is Jerry Robinson. Great to have you here today. I'm the founder of followthemoney.com. For those of you not aware, we've been running this podcast now for 15 years. It's really hard to believe. One of the longest running personal finance podcasts anywhere online. Great to be here today. Now, today's episode is going to be slightly different than normal. We're actually going to be doing a shorter episode to provide you with some basic overviews of what we're seeing in the markets. Today's episode 495, entitled Markets on the Move, and that's exactly what we're seeing right now. Precious metals, of course, many of you know, as we just talked about in our last podcast episode, breaking out higher. We have silver on the move. We have gold and platinum. Even palladium has begun to join a little bit on the move as of late. But we'll talk about that. Also, cryptocurrency also trying to bounce back after we got a little bit of a drawdown there over the last week or so. We'll be taking a look at that as well in today's broadcast. Global markets, by the way, like China, also showing strength as we head into the final stretch of the year. And so in just a few minutes, I'm going to walk you through what we're watching in terms of the major market indices. We'll take a look at gold and silver and platinum. We'll talk about Bitcoin and Ethereum and more as we prepare for the beginning of Q4, which is just around the corner. And before we dive in, I also want to remind our members and invite non-members that our brand new Position Trading Mastery course is going to kick off live on Tuesday morning, October 28th. It's going to be at the end of October. This is going to be part of our weekly Trends and Profits webcast. I'm very excited to walk you step by step through the strategies that I use for long-term trading success using what we call position trading, a very powerful strategy. If you're not currently a member, this is a perfect time to join us at followthemoney.com. Get access to all of our research tools, all of our commentary, all of our daily trading ideas and investing ideas. So all that available for our members over at followthemoney.com. So with all that said, let's get into today's market update. All right, let's jump into our market update. By the way, I'm recording this on the 29th of September. It's the morning, and the week is just beginning. We are looking out right now and seeing incredible bullishness in the precious metals market, as we had talked about. Also, the S&P 500 sitting near an all-time high. That, of course, is one of the most important markets out there if you're a trader or investor in U.S. stocks. The S&P 500 index really just provides a nice overview of what the broader U.S. market is doing. Studies have shown that basically 3 out of 4 stocks will follow the direction or the trend of the S&P. So it's obviously pretty critical when you're looking at the broader market. But the S&P 500 sitting at a nearly a new high after hitting one not too long ago. We haven't even had a pullback to the 50-day moving average since we broke out above the 200-day back in May. That's how strong this market has been. We would not at all be surprised to see that happen, especially as we are hearing about a potential government shutdown. Don't have a lot of new details on that as I speak. That is still a threat. It could happen. I don't think the politicians want that to happen. If it does, it could obviously put some pressure on equities. It could be a good buying opportunity for those who have been looking to get in or those who have been looking to add to different positions. I do think that we are going to continue to see more upside, broadly speaking, for U.S. stocks. The primary reason, rate cuts are expected, right? We're already seeing 2 more rate cuts expected this year as we head into the Next year, we expect to see even more rate cuts. Right now, the S&P is not overheated. It's 2 out of 3 stocks in the S&P are trading above their 200-day moving average. That's a historically bullish number, but it's not overly bullish. So it's not really the place where we be, hitting the cash register and moving along. We still have, I think, plenty of upside ahead. The same thing goes for the NASDAQ 100, which is another market that we talk about very often here. It's one that I like to invest in personally for the long term. I think it's one of the better indexes or indices, if you will, that one can invest in for the long term, as it gives you some nice broad exposure without that single stock risk. So QQQ, the NASDAQ 100 sitting literally just a hair below a fresh record high as I record this on Monday morning. Now, as I had mentioned to you, I also want to talk about gold. But before I get into gold, I want to talk about the U.S. dollar, because the U.S. dollar, of course, impacts all of these markets. We've seen the U.S. dollar pull back sharply since when? Since the inauguration. If you've been following our work, you know that we had expected the U.S. dollar to basically stage a similar pattern to what we saw at the first Trump administration, the first term of the Trump presidency. And back then, we had a rally in the dollar into the inauguration in January. In that case, it was 2017. And then we saw the dollar come right back down after the inauguration in a pretty meaningful way. We suggested that we could see something similar with the second term of President Trump. And sure enough, just almost like it was part of a script, we saw the dollar just rally into the election, rally into the inauguration, and then began to come down. And it came down with a vengeance. We saw so far this year, we've seen the U.S. dollar fall, around 6%. At one point, it was even down more than that. It's trading off of its lows. The U.S. dollar index got down to around 96 or so. Right now, it's trading around 98, 97, 98, somewhere in there. And that move down has obviously helped equities. It's helped precious metals, especially, right? We've seen that. The dollar is actually at an area where if we fall any lower, historically, that we're at kind of a trend line. And so it's possible we could get a bounce in the dollar, but I don't think that would really be due to any kind of real meaningful catalyst here. With expectations of lower rates, there's really no reason to expect the U.S. dollar to climb robustly this year. In fact, even as we head into the end of the year, we don't really expect to see that. Now, let's talk about gold and silver and platinum for a minute. I want to provide a quick update there as well. As we had talked about, we just recently did a podcast on that topic, episode number 493. We had talked about the gold and silver boom of 2025. We've also talked a lot about crypto this year. We'll talk about crypto in a minute. But the gold and silver boom just continues, right? Right now, gold breaking into fresh record territory. This morning, as I look at the futures market, we see that gold is sitting at around 38.60. That's simply incredible. Not only is it really incredible when you think about it, but when you go back and you think about where gold was, just say back in the beginning of 2024, gold was sitting at about $2,000 at the beginning of 2024. Okay, so it hasn't even been 2 years since that time, and gold has practically doubled in price. That is, incredible when you really think about it. Silver also, if we go back to the beginning of 2024, silver was trading at about $23 or so. Now we fast forward to today, silver futures trading above $47 for the first time in 14 years. You have to go back to 2011 to see this kind of price move in the price of silver. So silver obviously having a great year. In fact, if we compare silver and gold this year, silver is up around 60% as of Friday's close. Gold is up around 43% as of Friday's close. This has really been quite something, hasn't it? We've really seen some big moves here in terms of gold and silver. Now, let me talk just briefly about what we might expect here. When I looked at the gold-silver ratio this morning, I noticed that the gold-silver ratio was coming down in favor of silver, but it's actually hitting the area of around 80. And if you go back historically and look at that key level, for those of you who are long silver, long gold, that tends to be where silver historically has kind of pulled back relative to gold. If we smash through this area here, then the whole narrative is probably about to change in terms of what people expect from silver going forward. We already are seeing silver outperform gold here in this current environment as far as year-to-date gains. And so I would expect that we're probably going to continue to see that, especially if we power through this recent area we are at on the gold-silver ratio. I'm putting out a note to all of our members about that topic tonight, actually, so that they can be prepared if they're trading or investing around that. I own physical gold, physical platinum, physical silver, have owned precious metals for years physically. I expect them to continue to do well. Obviously, gold has done great this year, trading up where it is now. We expect more from silver. We expect more from platinum. We think that there's a lot more upside there. I had mentioned to you also that platinum was trying to get in on the action. Platinum is certainly up this year. We've opened the year at around $900. It's about $1,300 now, so it's certainly had a good run. It's just not anything like what we have seen in terms of the gains when it comes to, say, silver or something. So it certainly has lagged behind for some fundamental reasons as well. So overall, we look at gold sitting past $3,800 per ounce. That's obviously a sign that the market is aggressively pricing in the rate cuts from the Fed and the weakness from the dollar. We also mentioned that silver trading above $47 in the futures market right now. That's huge. We're nearing that $50, $49, $50 area where we hit back in 1980. We hit that back in 2011. So we're going for it again. I think we're going to move past that area, and we're going to hear some pretty interesting things in the wake of that, I'm sure, as more people kind of tune in to that particular market. We also mentioned platinum is showing great strength. The price of platinum in terms of the futures price right now sitting at about $16.28. So certainly seeing some great strength there as well. We started talking about platinum earlier this year when it had a major breakout above a key area that we were talking about. And our members have, I'm sure, greatly benefited from that rise in the metal. So these metals, are flashing several key themes, if you will. Safe haven demand, that's for sure. Yield compression, the expectations that yields are going to come down, which reduces the opportunity cost, of course, of holding metals. And then, of course, seeking hedges against inflation, right? All kind of wrapped up into one. That's really what precious metals are, serving as right now. We also see the flows into, precious metals ETFs, especially gold ETFs, and then, of course, the central bank accumulation, which is just really huge. It's all reinforcing the momentum here. So we think that gold could certainly hit $4,000 by the end of the year. I expect silver to potentially get to around $49 by the end of the year, maybe even $50. And then as far as platinum, $1,650 to $1,700, I think, is probably well within reason here by the end of the year. Now, let's move for a moment and talk about crypto. Bitcoin is trying to recover after a pullback from its recent $124,000 high. It is holding some support zones, but it needs to regain momentum above prior resistance in order to confirm the rebound. I'm currently watching the 110 to 115,000 level right now. We do expect that Bitcoin is going to have a great Q4. It could even happen as we enter Q4 that we begin to see things begin to change in terms of the price. We've been moving sideways now for some time, consolidating the big gains that we've had over the last few years. Ethereum also is battling in a range. It has key support at that 4,000 area. If it can break back out above 4,500, I suspect we're going to get that renewed upside. That's what I'm expecting as we head into Q4. Again, strong upside potential for Bitcoin and for Ethereum. Crypto right now feels fragile. The upside, of course, it will certainly come from a few key areas. A, the passage of the long-awaited crypto clarity bill, which will certainly, we've talked about that in a podcast episode not too long ago. We talked about on episode 491, crypto clarity incoming. I encourage you to go back and listen to that episode if you're into crypto. That's a really important episode that we did talking about what we see coming later this year. And we think that Bitcoins and Ethereum and many others are going to greatly benefit. We've been providing good key insights to our members about that market for many, many years, and will continue to. But I will suffice it to say that we do expect crypto to have a great Q4 here in 2025. And then finally, let me get into a little bit of China, because China has been this stealth uptrending market this year. The S&P China ETF that we track, GXC, that we're not really good for trading because it's pretty illiquid, but it's a great proxy for the Chinese market, broadly speaking. If you look at that particular ETF, it's up nearly 37% as of Friday's close. That's practically double what we've seen from the NASDAQ 100, or even or more than that, maybe even a triple compared to what we've seen from the S&P 500 so far year to date. Not quite a triple, but obviously a much bigger move. So China has been showing surprising resiliency lately. Export data, industrial activity, been really helping that narrative. There is a bullish signal for global risk appetite. As we look at China, we can clearly see that, especially when you combine it with the strength in the metals. And so in the U.S., as we transition into Q4, it's just right around the corner now, just a couple of days away. I believe the market is primed for catalysts. We're going to have those Fed rate cuts coming up at the remainder of the year. Earnings surprises could still lie ahead. Macro data that could surprise to the upside. We also have clarity coming for the cryptocurrency market, and on and on and on. By the way, I'm going to be updating our Smart Score 11 strategy this week. For all of our members, you've been following the Smart Score 11 strategy. That's actually a strategy where we pick 11 stocks, and the whole goal is to beat the S&P 500. So far this year, we've been doing it. It's been doing fantastic all year long. We're going to provide the new update for Q4 for all of our members, so you'll be able to see what 11 stocks are in that particular strategy as we head into Q4. So be looking for that in your inbox very soon. But that's basically how I see the overall current landscape. We see metals taking the lead. We see crypto attempting to stabilize and rebound. We see global flows are really tilting toward risk assets, and I think we just have more upside ahead. So we're bullish as we head into the remainder of 2025. And if you would like more information on what we see ahead and you want all of our member alerts and member updates, go to followthemoney.com. Click on the plans and pricing button and choose your plan and start getting access to our top investing and trading ideas. This is certainly a perfect time to be a wise steward of your finances. I'll see you on the other side of this quick break. Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247 2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812.
Welcome back to Follow the Money Weekly. And here's Jerry Robinson.
All right, friends, welcome back to the final moments of today's broadcast. It's been great to have you here today. And as we wrap up today's episode, talking about these markets that are on the move, let me just leave you with this thought. You know, it's in times like these when the markets are on the move and when headlines are loud and when politics are really getting hot, you know, it's easy to get lost in all the noise. And every day there's a new story, there's a new lead, there's a new headline, there's new tariff headlines, there's a new Fed drama or crypto regulation or central bank chatter or just whatever. It's just nonstop, you know. And the truth is that most of that is just noise, right? The real work for us as traders, as investors, as good and wise stewards of the funds and the finances that we have been entrusted with is to be able to separate the noise from the signal, right? So noise is designed to distract you. The signal shows you the trend, and that's where the profits are made. It reminds me of Benjamin Graham, the father of value investing, a huge influence, by the way, on Warren Buffett. When Mr. Graham wrote, "The investor's chief problem and even his worst enemy is likely to be himself." Right? Very true. It's not the headlines that hurt us. It's how we react to the headlines. Right? So my encouragement to you today is simple. Just don't get caught up chasing the headlines. Right? Don't let the media whip you around and cause you to lose money by getting nervous and getting distracted. Keep your eyes on the trends, stick to your system, and let the data, not the daily drama, drive your decisions. That's how we quiet the noise. That's how we keep our discipline. And that's how you and I will win in the long run. I want to thank you again for tuning in to today's episode of the Follow the Money podcast. Don't forget, our brand new Position Trading Mastery course begins live on October the 28th as part of our weekly webcast for all of our members. And if you're not a member yet, head over to followthemoney.com, click on that plans and pricing button, and join us. We'd love to have you on board, and I'd love to see you on the other side. So until next time, friends, this is Jerry Robinson reminding you that when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and I'll see you right back here next time. Until then, God bless.
Contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.